I'm gonna do something new on this video, and that is if you are into watching movies or TV series, you probably have heard of Netflix. They are one of the biggest streaming services in the world. Founded in 1997 in the US, they initially started with renting DVDs by mail as their core business, and after 10 years, they pivoted to a streaming video on demand service. They have been growing their subscribers very fast, and right now is the biggest in the US, which is their biggest market too. But they have been losing ground to others that recently entered this area, and that's expected. When you are the number one, there's only one direction to move. So we are gonna go over Netflix financial data and see if they are a wonderful business. And I have a surprise for you by the end of the video, so make sure to watch it till the end. Looking at their revenue, it has grown from 3.5 to 32 billion in the past 10 years, but they are low on margins, and most of the time their free cash flow is negative. They started burning cash when they started creating their own content. So we need to do more research and see if that was a wise choice. Has it paid off by contributing to the increase of their subscribers or not? They have lots of debt, but they can pay half of it down using their cash. Their equity has been growing very fast, so let's check their assets and see what do they have in their balance sheet. Out of 48 billion of assets, 32 billion is contents. So they are claiming that's how much their original contents are worth, which we cannot count on if they need to pay down their 15 billion of debt or the other 13 billion of liabilities. And if you are wondering about the tool I'm using, this is simply Wall Street. It's a great product with access to more than 50,000 companies in 90 different countries all over the world. You can check financial info, news, valuation, dividend, shareholder structure, and much more. I have their unlimited account, which costs $20 per month, but if you use the link in the description below, you can get 40% off with a 14-day free trial period, which makes it a no-brainer. So make sure to test it out. Thank you Simply Wall Street for their great offer. The problem with companies like Netflix are they have not proven themselves if they can create free cash flow even if they grow 10 times in size. So we would be betting on them if we invest, expecting them to create 20 billion of free cash flow out of 100 billion of revenue in the next 10 years. With a multiple of 20, they will be worth 400 billion, and right now they are worth 200 billion. So in 10 years we will double our money, but we need to quadruple it if we want to make 15% per year, which is what we are aiming for. So it seems people have priced in all the growth Netflix might possibly have in the next 10 years. Their number of shares out has been growing, and they have been spending on share buybacks in the worst times possible, buying back when it was high in 2021 from 478 to 700, and stopping buybacks and giving away shares to employees and management when it was low in 2020 and 2022, when it was between 160 and 600, which does not make sense for long-term shareholders. The same thing happened if we look at it quarterly. So for those reasons, we will remove Netflix from our list and maybe look at them in a couple of years and see if the business is making more reliable free cash flow and if management is behaving more shareholder oriented. Now for the surprise. I'm gonna do something new on this video, and that is commenting on another recent video about Netflix. This is Joseph Carlson, one of my favorite YouTubers. I like his approach and style, both in investing and creating videos. We own so many of the same companies. Let's watch him talk for a minute, and then I will share my thoughts.
We're currently in the green a little bit on this company. And right now, if we look today after earnings, and this is just literally minutes ago, if we look at how it's trading right now, it's down 3.47%. So we're seeing a little bit of selling, but honestly, this is not bad. Down 3%. If we take a look at Netflix's history, year to date, it's up 61%. We look at the past trailing 1 year, and it's up 119%. So up 119%. Just in the past month, up 10%. Am I okay with a little 3% sell-off? Yeah, that's basically a win as far as Netflix is concerned. What we're really concerned about is a disastrous quarter, one that causes a 20% sell-off. So this right here, I don't think this is concerning. This is going to put us back a couple days, maybe. That's basically it.
Listening to him saying it has been up 10% in the past months, am I really okay with 3% sell off? I know we have a difference in core beliefs despite both being value minded and interested in the same type of companies. He is happy his investment have gone up. I get happy and excited when my investments go down. When I see days like this, I would say to myself, nice, now I can buy more of the same wonderful company with the same amount of money. And the companies I own are doing share buybacks, so they can buy back more shares and I would own a bigger slice of the pie over time. That's the only thing I care about. I'm not a stock trader. I'm not even a stock owner. I'm a business owner. The only numbers I care about are the ones that shows if a company is wonderful and how much of that wonderful business I own. Nothing else. I don't buy companies with the intention of selling it someday. I may sell it for some reasons, but I don't have that intention going in. So why should I be happy if it goes up? I should get sad, right? And some people ask me, how am I gonna live off my investments if I'm not gonna sell? That's another story for another video. So make sure to subscribe to my channel and I will tell you all about it. So anyways, I thought I should share my approach to investing and show you the difference between my mindset and other YouTubers talking about the same topics. Hope you enjoyed watching this video. If you did, make sure to tap the like button for the YouTube algorithm, subscribe to the channel if you have not done so already, and hit the bell button to get notification and never miss my videos. And share them with your friends. It's free and it's the best way to support me. Check out Simply Wall Street offer, link in the description, and next watch this video with some news on Microsoft and how I would approach these type of news. Have a great rest of the day and see you on the next one.